Welcome back. We are now hearing that MicroStrategy got the long-awaited credit rating that they and many of their MicroStrategy maximalists have been waiting for. But this is just an example of why you shouldn't hope. You should be basing your investment thesis on actual data, and that there are times to enter and times to exit the market. In today's video, we're going to be exploring some different conversations and different situations that are going on in the crypto space that kind of go in line with my thesis that we are at the end stages of the Bitcoin cycle in 2025, as we are now past the 550-day or 18-month mark since the Bitcoin halving. And historically, every cycle prior, we have topped out before the 550 days or 18-month time frame in the Bitcoin cycle. And there's a lot of people on my channel who say that this is not the situation. And I'm not here to convince you of anything. I'm here to provide my analysis and opinion, and that is what we do every single day on this channel. So make sure you guys are subscribed to the channel. Give the video a free thumbs up. We have a lot of things to get into, a lot of topics to cover. We're going to talk about Metaplanet, Coinbase, the SEC, new ETFs that are launching. I mean, there's so many things that we're going to be talking about in today's video, and we're going to talk about the macro economy as well. But we're going to start right here with Peter Brand, legendary and well-known futures market trader since 1975, longer than many of us have been even on this planet. And he said here this. Peter Brand said, traders, there is only one legit reason for speculating in stocks, futures, and crypto, in his opinion. That is to build wealth and maybe develop a trading into a full-time gig. If your goal is to just have fun, then good luck. And I would completely agree. There's a lot of people out here that, they hear their friend, their family, they get involved in crypto or investing and they're making money, and then they try to do it the same thing. You guys know, like, I have counter trader indicators, which are when you get calls from people and they say, well, Cryptoviser, how do I invest in hyperliquid coin? I'm hearing that a lot of people are making money in hyperliquid. And by the way, we're about to talk about hyperliquid as well. But before we go there, they have no understanding of what hyperliquid is, what their tokenomics look like. If we're talking about MicroStrategy, they don't understand that MicroStrategy is continuing to sell shares on the open market. They're diluting your shares. They don't care. It has nothing to do with the Bitcoin that they're purchasing. That Bitcoin they're buying at all-time record highs right now. And if the Bitcoin price goes below all-time highs, this is a risk. They don't understand any of that, but they want to throw all of their money into it. This is not investing. There's somebody that asked me about investing, I think during the beginning of the bull market. And I told them, I said, go watch this one video. It was a 30-minute video on a channel, I think called The Minority Mindset. And I said, go watch this one video, which kind of just generally explains what investing is, what the risks involved, what the rewards are. Months later, you think that they watched that one 30-minute video? The answer is no, but they still wanted to invest. So Peter Brand said, if your goal is to just have fun, then good luck. I have no time for you. If your goal is to do repeatedly 2x or 5x or 10x returns, then I hope you're trading zero-sum markets, because you will be my competition. He said, in my opinion, developing a long-term trading approach capable of consistent 20 to 40% returns without crazy asset volatility is a fabulous goal to have. If this is your goal, then you have 5 major phases to go through. Phase 1, figure out what asset class is for you. Phase 2, learn how trading in that asset class works. Phase 3, developing an approach that can become your starting point for real-time forward testing and refining. Phase 4, adopting an approach only after proving it to be profitable over several hundred trades. And Phase 5, overcoming doubt and learning trust. He said battling ongoing is the biggest challenge career traders have. Every pro trader that has been fully transparent with him has admitted the same, that battling doubt and ongoing is basically what speculation is all about. Having doubt and second guessing is not a negative. They come with the territory. And this is one of the things that we've been talking about on this channel, is the fact that, I always say that in the previous cycle in 2021 and 2022, I called the top and the bottom of the market. The top, I gave you guys a range and I was correct. And the bottom, we called it literally to the day. months before it actually happened because we saw everything that was going on. We studied the market for years. I've been talking about this on the channel here since 2018. The US debt at the time was $19 trillion. We're now at 38 trillion. We've doubled the debt in the length of time that I've had this channel. And, you know, a lot of people just want to get rich. They want to, and here's the deal, guys. There are some people who get lucky. They buy the Shiba Inu token before anybody knows about it, and then it does a huge run up, and then they sell at the top, and then they don't reinvest and double down and trade more and lose all their money. These are very few and far between. But we are now at the end stages of the bull cycle. And as I said in the previous cycle, by this time next year, there are going to be people who are multimillionaires in their portfolio today that will have nothing in their portfolios next year because they're going to overtrade, double down, not understand how these cycles work. And, you know, if you don't even understand how the cycles work, you don't know where we are in the cycle. I mean, there's still people on my channel who say, but Cryptoviser, we're not in euphoria phase. I mean, most of my viewers understand we are well beyond the euphoria phase. Euphoria phase, I think, happened in the middle of 2025, which effectively is the end of the cycle. When all these Bitcoin treasury companies pop up and everybody's chasing this, you know, oh my God, we got to do exactly what MicroStrategy is doing. Now, we're going to get to that in just a second. But this is another wild stat. All the net wealth in the US stock market since 1926 has been generated by just 3.44% of companies. To put this differently, 97% of all stocks have barely contributed to long-term shareholder wealth creation. And again, this is long-term. And a lot of people are like, well, I'm going to hold this stock for 50 years. Okay, we don't even know what's going to happen in 10 years with the stock or with the company, let alone 50 years. I mean, there's people who are like, I'm never selling my MicroStrategy shares. And it's like, they've already proven that they're going to just continue to dilute you. So you literally don't know what you're talking about. You literally don't know how to invest. And you're telling us you don't know how to invest by saying that you're putting all your money in MicroStrategy and that you're going to hold it forever. Like, they're telling you they don't know what the fuck they're talking about. And there's people who are like, wow, that's such a smart idea. I'm going to do the same thing, right? So that brings us to MicroStrategy. MicroStrategy finally got their credit rating, which B in crypto called dismal. And I would completely agree. The S&P Global Ratings assigned a credit rating to Strategy, giving it a B-. The firm claimed that its weak liquidity and narrow focus on Bitcoin could make it fragile to future collapse. And I would completely agree with this. And here's the deal. Remember I told you when we're at the top of the market, everything is bullish, right? So even the MicroStrategy bulls, they're like, wow, we got the credit rating. Yes, this is what Michael Saylor wanted. Now we just have to get it upgraded. And then we're going to get included in the S&P 500. And we're going to get included in the other stock indices. It's happening, guys. It's happening. No, it's not happening. It's literally not happening. This is one of the worst ratings. It's literally a junk rating. Josh, who's a well-known MicroStrategy bull or bear, depending on the day, he said those in the MicroStrategy community who are up in arms about S&P's rating review either have no idea how things actually work or they're pandering to you for engagement or both. The document is essentially like a SAT test. It clearly highlights the areas that need improvement and practically hands you the answers for next year's SAT test. And effectively, that is true. The S&P signaled outsized risks of a future MicroStrategy downgrade with low chances of an upgrade in the next 12 months. It's already junk bond status, but a downgrade would likely trigger a large crash of both the common and the preferred equity in MicroStrategy, signaling a toxic waste to investors. But again, the MicroStrategy bulls, they're like, wow, this is so bullish. We finally got the credit rating. Michael Saylor is a genius. Meanwhile, B- means highly speculative with increased default risk, meaning liquidation. It's a high risk. And it's B-. So it's actually between B and triple C, which is very low credit quality with very high risk of default. That's where MicroStrategy got rated. And there's people who are like, but Cryptoviser, they're going to get included in the stock index. Just like they were going to get included in the stock index in September, and then they didn't. MicroStrategy has been given the B- junk bond rating by the S&P 500, indicating high risk. They said, we view Strategy's high Bitcoin concentration, narrow business focus, weak risk-adjusted capitalization, and low US dollar liquidity as weaknesses. So let's get this straight, right? The credit rating agencies see these as weaknesses, and the bulls of MicroStrategy are like, no, Michael Saylor, do exactly what you're doing. Don't change anything. We don't need them. Meanwhile, like 2 weeks ago, they're like, we can't wait for a credit rating, and then they get a shitty credit rating, and then they're like, well, we don't need the credit rating. Screw them. We're not going to change anything. And here's the deal: Michael Saylor and MicroStrategy and all these Bitcoin treasury companies, they're all buying the top of the market, the literal top of the market. And they're doing this by diluting the shareholders. And they're doing this to keep the elevated price. But when the liquidity dries up, and it has been drying up, everything collapses. There's no multiple streams of income. There's no cash flow. They have very small cash flowing business. At MicroStrategy, they do have a business underlying, but it's very, very small. And to all those bulls that are saying, Cryptoviser, you're just a fudster. You're just being bearish. Well, the literal credit rating agency had said over the next 12 months, we could lower the rating if Strategy's access to capital markets is impeded, either due to a marked deterioration in Bitcoin valuation or any other reason. And we believe there are increased risks that the company will not be able to manage maturities of the out-of-the-money convertible debt. Well, if we're at the top of the market, which we are, and the price deteriorates, meaning goes down, which it will, they're going to lower the rating. And the MicroStrategy bulls are like, nope, we're going to buy more. We're going to buy more MicroStrategy because Michael Saylor is a genius. He said there's going to be no bear market, Cryptoviser. So you're saying that we're at the top, but he said there's no more bear market. Okay, I'm not here to convince you of anything. If you want to believe there's going to be no bear market, go for it. But most of my viewers, most of you guys, you get it. You're very smart. You understand the risk, and you're probably betting against this, right? And they said an upgrade is unlikely in the next 12 months. Over the long term, we could raise the ratings for these reasons, but they're not going to be doing it anytime soon. Meanwhile, in the other Bitcoin treasury companies, Metaplanet, okay, is using their Bitcoin as collateral for debt to get money to go buy more shares, basically doing a stock buyback. Okay, so let me repeat that. Metaplanet is starting a share buyback program, which generally means that they want to stop the bleeding from the share prices going down, because if we look at Metaplanet's stock price over the last 6 months, and this is in the Japanese stock market, 74% to the downside. And it's probably going down even more, right? And there's people who are like, but Cryptoviser, that's because the MNAV of their underlying Bitcoin is negative, or it's under 1. And it's like, yeah, but that's because the market is pricing in the price of Bitcoin going down. So they're gonna buy their stock back now at the literal lows, and then if Bitcoin goes down further, let's say Bitcoin goes down 50%, just for this example. If Bitcoin goes down 50%, what do you think is going to happen to Metaplanet's stock price? It's going to go down at least 25%, if not 30 or 40%, maybe even 50% or more. And so they're buying back now, even though Bitcoin's at all-time record highs and the stock price went down 70% over the last 6 months. This is solidification of what this thesis on this channel has been. We are starting to bet against the market. We are getting out of crypto. We are getting out of these crypto-denominated assets like Metaplanet, like MicroStrategy, like all of these other ones. This is not the time to be investing in them, in my view, in my opinion. And I would think many of you would agree. So they're doing a stock buyback and using the Bitcoin they have on their balance sheet, which is it's the valuation of the company because of the Bitcoin. And they're using it as collateral to take out $500 million in debt backed by their Bitcoin to go buy shares of their company stock back. AKA, it's just a circle of money that is, this is exactly why Celsius, Voyager, 3 Hours Capital, Terra Luna, BlockFi, and FTX went down, because they were all in a circle borrowing money from each other. So FTX would have money, they would loan it to Celsius, Celsius would then loan it to Voyager, then Voyager would then loan it to BlockFi, then BlockFi would loan it to 3 Hours Capital, then 3 Hours Capital would loan it back to FTX. So it was all the same money going in a circle, AKA Ponzi scheme, right? Because it's not real. It's not real. And it only works until people realize that it doesn't, until the trust goes away or the whole market deteriorates in a bear market and the valuations go down and then they can't repay back those loans and then they get liquidated for their Bitcoin. And people are like, but Cryptoviser, they're not going to sell their Bitcoin. Are you kidding? Why would they do that? Well, the dominoes have already started falling. Ethereum treasury firm ETHZilla, which just started buying Bitcoin this year, within the last 12 months, sells $40 million of Ethereum as part of their $250 million stock repurchase program. So they're already selling to buy their shares back, to pump the price back up of their stock. And to balance, I would imagine, most of it is to balance their MNAV, right? Back to 1 or above 1. But this is what all of the companies are going to do, right? I mean, effectively, Metaplanet is selling their Bitcoin because the creditors are like, yeah, I mean, you want to give us your Bitcoin as collateral? We'll give you the money. Who knows what that actual, it says right here, the facility allows the company at its discretion to promptly execute borrowings, right? Borrow money, a loan, collateralized by Bitcoin at any time. But we don't know the details of that loan, right? They could effectively be, okay, we'll give you, if you have, let's say $1 billion of Bitcoin, we'll give you $200 million, right? We don't know exactly how much Bitcoin they're pledging as collateral. And so the creditors, they don't care because they could get the Bitcoin regardless. And you as a shareholder will lose regardless if they get liquidated, if they get called on that loan. And in the likelihood that the price goes down of Bitcoin and the price of the stock therefore goes down even further, it's not going to be good. And this could go on for another year. This could go on for another decade. But this is really not great. And the repurchase period is basically November to November of 2025 to 2026. And they want to purchase back 150 million shares, equivalent to 13% of the total issued shares. But I mean, think about that. They're going to be purchasing their own shares with a loan that is collateralized by their underlying assets. So how do they pay that back? They have a hotel. That's their only business. And the hotel is not even like a luxury hotel. It's like a, mediocre hotel. Let's be clear about that. And so they're borrowing $500 million. I'm sure the hotel probably doesn't make more than $10 or $20 million a year. So where is their cash flow coming from? How are they going to pay back that loan? It all relies on the fact that Bitcoin price will continue to go higher. But what if Bitcoin price doesn't? You guys have to understand, like, Wall Street is now involved in Bitcoin. They are in control. They are going to wipe out all of these companies that are doing all this financial gibberish nonsense. They're going to wipe them out. So, this is one of the advisors or executives over at Metaplanet, Dylan, and he said Metaplanet has authorized repurchase of 150 million shares of its common stock. Concurrently, the company has secured a credit facility for use of up to $500 million to be utilized at the company's discretion. He doesn't mention that they're going to be, putting their Bitcoin up as collateral. Left out that part. But that's kind of where we are in the cycle, guys. This is where we are in the cycle. And I think it's end stages, right? We are going to see collapses of these companies. DeFiist on X said borrowing against Bitcoin to raise cash to purchase equity. We're now levering underlying assets instead of taking advantage of the equity debt capital markets. This is the reason digital asset treasuries are in the first place. This can't end well. And in my view, it won't. But meanwhile, we have these maximalists who probably have most of their portfolio in these companies and refuse to sell, refuse to see or even highlight any of the risks. This maximalist said, so let's make this clear on Metaplanet. If the new share buyback program deters shorts and traders pushing the price below 1 MNAV, then 1 MNAV is the floor, so to speak. So if I buy Metaplanet at 1 MNAV today, I get Bitcoin equivalent returns in perpetuity, along with the possibility of future Bitcoin yield, future leverage, and the market valuing their positive cash flows. The stock is a no-brainer. Buy, buy, buy. Now, I don't know whether he's getting paid or not to say this, because this is not going to deter shorts. In fact, it's going to incentivize more shorting of the stock, more exiting of the stock, because you now know the company will give you your money back by selling your shares without impacting the price. Why would you not take it? This is not like this is a lifeline to keep the company afloat. This is not like a great new strategy that's going to bring the company back to its all-time highs. Remember what I've been saying on this channel, top chasing. We hit these tops 6 months ago, and everyone's like, oh, no, we're not in a bear market. It's like, no, we're down 70% in 6 months. That is a bear market. No, Cryptoviser, we're not in a bear market. We're in a bull market. And it's like, yeah, but we're down 70% in this stock, almost 80% in 6 months, less than 6 months. That's a bear market. No, Cryptoviser, that's a bull market. It's like, what the fuck are these people? What are they smoking? Right? What are they smoking? But we get it, right? And this is where we have to counter trade this. Going back to Peter Brandt's, tweet on understanding how these markets operate, right? This is what phase. Develop an approach that can become your starting point for real-time forward testing and refining and adopting an approach that only after proving it's profitable over several hundred trades. This is what we've done literally for multiple years now, is understanding how these market cycles work, how the Bitcoin cycle works, how the psychology of the markets work. We are in complacency phase. No matter what anybody says, we're probably beyond complacency phase, to be honest. But once complacency phase is over, straight down. And so they're trying to keep this complacency phase going on as long as possible. MicroStrategy by saying, oh, well, we're going to get the credit rating. It's shitty. Oh, we're going to get included in the S&P 500. They didn't. Oh, we're going to keep buying at the top of the market. They are, and that's not good. And meanwhile, Metaplanet is saying, we'll just buy back our shares to stop the bleeding. But they can only keep buying back the shares until they get 150 million shares bought back, which is 13% of the company. And then what happens if the Bitcoin price keeps going down? They're fighting gravity, effectively. They're fighting gravity. And people like us on the channel, we don't have to be shorting or against this stock to be bearish the stock. We just are not in it, right? I'm not short MicroStrategy directly. I'm indirectly shorting MicroStrategy 100%, because all of the data points to the fact that MicroStrategy stock price will go down. And if we go into a bear market and the price of Bitcoin goes down 50, 60, 70%, which is more likely than us going to $500,000 and staying there, we win. We win. And we're here to trade the market. We are not here to hold these stocks for 15 years. We talked about this in the previous cycle with Cardano. I thought I was going to be holding Cardano for a long time. Then I saw they were not executing on what they were promising. And the crypto price started going down. And it was very clear that the insiders were selling their coins and telling us, no, we're going to be releasing all of these new products. And we still, to this day, a whole cycle later, don't have those things that they promised, that they said they were going to have, that every other cryptocurrency in the top 50 has: interoperability, stablecoin compatibility, chain link integrations. They don't have any of that. Same thing happened this cycle with ICP, right? ICP, Internet Computer Protocol. I'm very bullish on the technology. I don't know that I'm bullish on the execution of the strategy that they have, because it just has not gained steam the way that we thought it would. And the reason, there's many different reasons, but effectively it's because they pinpoint focus on one thing, which was Caffeine AI, which is not Internet Computer, and it's not improving the valuation of Internet Computer, instead of promoting the network as a decentralized cloud provider, as a backup to Amazon Web Service, a backup to Google Cloud. They didn't do any of that. And so whether it's going to become in the future or not, I don't know. But going back to the other tweet, right, 97% of all stocks barely contributed to long-term shareholder wealth creation. And the same thing goes for altcoins. The same thing goes for these MicroStrategy and Bitcoin treasury companies. And again, by the way, Strive, which is another Bitcoin company, They're buying the all-time record highs also. They acquired 72 Bitcoin for $8 million, and they did this by basically more dilution by exercising traditional warrants, which is basically effectively the same thing, right? They're selling derivatives on the market and diluting shareholders. And why are they doing this now? Well, the stock price went from under $1 to over $1, so they saw this as an opportunity to take some of that cash out of the market and put it into Bitcoin again at all-time record highs. But what we are seeing here with ETHZilla, which just started acquiring Ethereum this year, within the last 6 months or so, and they're already selling to buy back their shares, guys, the cycle's over. And this capitulation, I don't know if I've said this on the channel, but I've definitely had it in my overall thesis about the market. The second we see the first company selling their crypto, it's over. It's over. Done. For all of them. You may say, well, Cryptoviser, this is Ethereum, it's not Bitcoin. It's over, guys. It's over. The cycle is completely over. There is going to be volatility. There's going to be potentially higher prices in the shorter term, but it's over. They have capitulated. And once one capitulates, the rest are going to capitulate. The rest will sell. I mean, what Metaplanet is doing is effectively capitulating as well, because they're pledging their Bitcoin as collateral. If you're a shareholder in Metaplanet and the price goes down and they get called on that loan and they can't pay it back, you are fucked. Your value of your stock goes to zero immediately, because the only thing holding the share price up right now is the Bitcoin that they are holding, which no longer belongs to the shareholders because it's collateralized under a loan, and they're buying back the shares of their own stock. These are, I mean, talk about red flags in the market. Talk about black swans in the market. The bleeding has already started and it's going to accelerate, and they know it. They know it. That's why they have to keep these things elevated as long as they possibly can. And by the way, they're not even doing it when Bitcoin price is lower. We're still technically at all-time record highs. What happens when Bitcoin goes under $100,000, under $90,000, under $80,000? Oh, well, Cryptoviser, that's never going to happen again. Michael Saylor said. Okay. This, in my view, is capitulation. They're not going to be they're the first, but they're not going to be the last. Most of these companies are going to sell some of their crypto. And if they don't, if you're a shareholder, it's going much, much, much lower. Much lower than it's already gone. I mean, look at Strive over the last 6 months. Pump, dump, 94% drop. And they're still buying the top of the market. I can't even believe what I'm actually seeing in the market. Like every time the market pumps a little bit, right? Like it did with Strive, right? It went up and I'm like, oh shit, maybe I'm making the wrong decision. And then they make these stupid decisions like buying Bitcoin at all-time record highs. And it's not even like they're buying a lot. They're buying 72 Bitcoin. Like that's going to make a real big difference in the markets. It's not. It just solidifies for me. Oh yeah, it's over. When MicroStrategy gets a bad rating, a bad credit rating, right? A junk bond credit rating. And the bulls are like, oh, well, this is bullish. Everything is bullish. This is bullish, Cryptoviser. I'm like, what? When I see tweets like this saying Metaplanet is a buy because they're buying back their shares using collateral of the Bitcoin that's underlying, and they're cheering this on, it solidifies, no. Put all my money and short the shit out of this, right? Now, obviously, I'm a more conservative trader in the market, so I'm not going to go and short it completely. But this just solidifies that the thesis that we have on this channel is 100% accurate. And why did ETHZilla start buying back their own shares? Well, it was a pump and dump also. 85% drop. And it's probably under the 1 MNAV, right? We're lower now than we were before they started buying the Ethereum. We're lower now. And by the way, Ethereum hasn't even gone above $5,000 a cycle, and I don't think it's going to. because everybody in the market who's been holding these coins is just hoping, oh, we're going to hit 10,000. We're going to hit 10. I'm going to wait till 10,000 Bitcoin. I'm going to wait till 250,000. I'm going to wait till 300,000. Well, you're going to be waiting for a while because the cycle is over. Anyway, let me know what you guys think about this. This is huge warning signals in my view. Definitely something to keep an eye out for. Don't forget to give this video a free thumbs up. Hit the subscribe button and let me know your thesis and your opinions on everything that's going on down below. Again, I'm just giving you guys my analysis and opinions. You could disagree with them. That's totally fine, but I want to know what you guys think in the comments. What else is going on in the markets? And then we're going to flip and talk a little bit deeper into what's happening with these Bitcoin treasury companies, what's happening in the trading world, and how we should be positioning ourselves. Because as I've been saying, we're going to be seeing a lot of volatility in the markets. And the volatility that we are seeing is things like this. A runaway bot, which I never even knew was a thing, sends hype token to $98 in 1 minute on lighter DEX. So what in the hype or liquidation is going on here? Well, a runaway bot triggered a violent price spike in the hype token, briefly sending it to $98 and igniting a debate over liquidity and front-end transparency on DEXs. Hyperliquid skyrocketed from $47 to $98 in 1 minute on a DEX before crashing back on Monday. And Lighter DEX said a runaway bot jammed through the hype book with size. There were no liquidations or other adverse effects beyond this. Low volume was traded at very high prices, leaving the wick in creates scaling issues for the chart, so it was scrubbed from the front end. Whoa. So effectively, this is what the chart looked like. And they removed it. They removed this wick so that people don't see that it went to $98, because this is the deal with these cryptos. A lot of the cryptos, they don't have that much liquidity in them, right? Above, maybe 10% or 20% outside of the current price. And so if you put an order in and it executes at a much higher price, the wick is going to go up that much. And then all of the bots that are trading, and there's a lot of bots that are trading on these DEXs and even centralized exchanges as well. They have to figure out what the hell's going on and readjust. So they start adjusting higher immediately. People start looking at the markets and saying, what the hell is going on here? Am I missing something? Then they start buying more. And then it just creates potentially, and a lighter DEX, I think, is a fairly low volume DEX. But, if this could happen on Binance, this could happen on Hyperliquid, it could happen on Aster. And when that does occur, it could create this situation. I mean, we've seen this with the Bitcoin treasury companies. I mean, if you look at any of the Bitcoin treasury companies, you see these major moves to the upside and then boom, straight back down. This is probably a better chart to look at, Strive, where you can see when they made the announcement of them, going to be buying Bitcoin and buying Semler Scientific, you could see this major run up, then another major run up, and then cut straight back down, right? And so from the bottom to the top, it went up over the course of just 2 weeks. It went up to 20x, and then it came down 70% very, very rapidly. And so this is on a more extended timeline, but you can see this on most pump and dump schemes, right? Or where there's issues with a DEX, or they exploit a certain rule of how the DEXs work, or centralized exchanges, or whatever. And so this is where it's really important that you guys understand how these things operate, and also understand when you see wicks like this, right? We even see it in stocks. Sometimes GameStop pops up, sometimes some of the other stocks, they just pop up immediately, straight up, but then they just come straight back down, right? Because this could be one trade trading for $98. It could be one coin trading for $98. And it makes everybody think that that's the all-time record high, which technically it is, but then everybody starts top chasing. And because it was only one coin that traded for that, well, it's not going to hit that anytime soon. And so everybody just keeps top chasing. And then technically, most of the traders try to get out because they understand how that's going to work, and they see the liquidity, and then the price actually craters usually right after. That's why you see a pump and dump. But these are indicators of where we are in the cycle. And we've been talking about this for months now, that we are at the end stages of the crypto cycle. And any event, any black swan event, any uncertainty in the market, even if it's fake, right? Because sometimes we're getting fake news. The more fake news you see, like, JP Morgan just bought Bitcoin, and then Bitcoin goes up, and then JP Morgan comes out and says, no, we did not. and then it goes straight back down, right? That's an example that didn't actually occur, but maybe it will, right? These are typical indicators of end of cycle movements in the markets. And so when I saw this with hype, and remember what hype is all about, hyper liquidation. That's what it is. And yeah, it's just kind of an indicator of where we are in the cycle. But if we kind of zoom out, we can understand that yes, banks are getting involved. Bitwise posted this, banks are buying in. And it shows a list of the banks and what kind of crypto services they provide. And well, what is the only bank on here with access to crypto trading and custody, private crypto funds, crypto ETPs, crypto-enabled payments and tokenization? If it's not JP Morgan directly. JP Morgan is involved in all of this, right? And obviously they are, because they're the largest they're the largest bank potentially in the world. They bank Gemini, they bank Coinbase. So they've been involved for quite a long time in crypto and crypto related products. But a lot of people are looking at this and saying, but Cryptoviser, this is super bullish. And it is bullish that the banks are getting involved, but they're not getting involved because they want to, they're getting involved because they have to. They understand that the regulatory environment has changed, that the generational interest in this new technology it's probably at all-time highs. And so they're getting involved, but they have been involved. JP Morgan has been involved for years in crypto. They created their own blockchain. They created their own cryptocurrency. They funded Consensus. Fidelity, same type of situation. Some of the other banks, they're getting more involved now, but this is not an indicator of, oh, we're about to start the bull market. No. If they announce something, it's not that they just started doing it. They have been doing it for a long time. Right? People are saying, but Cryptoviser. JP Morgan is saying they're going to allow their institutional clients access to crypto services. They already have. They have their own blockchain. They have had their own blockchain. They have their own crypto coin. They've had their own crypto coin. This is not news, right? This is just reiteration of prior news that we heard from these financial institutions. And so you have to be very careful, especially at the end stages of the bull market. What could move the market? Like what the US buys Bitcoin, is that going to move the market? Not really, because that's not really new, right? And it's not really going to be anything different than what we've already had, where they're just not selling the Bitcoin. They're just holding the Bitcoin that they get for many different reasons. There's people who say, but Cryptoviser, Saudi Arabia, and they're buying Bitcoin. Yeah, but they have been. Just because you're finding out about it doesn't mean that it's new. They have been. So what we're seeing in the market, that is already priced in. And I think it was Stanley Druckenmiller, a well-known investor. He said the other day in an interview that the market today, everything is already priced in, right? You have to think about what's next. And what is next is correction, right? Because everything has been based on speculation this cycle. U.S. is going to buy Bitcoin. U.S. is going to have a Bitcoin strategic reserve. Nobody's talking about that anymore, right? They're going to audit the gold reserves. They haven't done that. And then we also have to look at the macro economy, because the macro economy, there's a lot of issues as well. But before we go there, and by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video right here on the Cryptoviser podcast. Coinbase and Citi are going to explore digital payments, including stablecoin payouts for banks' institutional clients. And this is just another example. It's already priced in. Like, we know the banks are going to do this, and we know that they have been transitioning to start crypto-related services, right? So this is not new. This is just an example of what we already know. But there's a lot of bulls out there that will say, oh my God, you got to buy crypto right now because Citi's going to be using it for stable coins. It's like, what does that have to do with Hyperliquid coin? What does that have to do with Shiba Inu coin or Sui coin? It has nothing to do with that, because they're going to be using regulated stable coins like Tether, more likely Circle, which are based mostly on the Ethereum network and Solana networks. And so is that really going to make a big difference? And how many of their institutional clients are really going to be using this immediately right off the bat? Because the thing is, the institutional clients can already do this, like I just showed you with JP Morgan and some of the other banks as well. So just because Citibank is doing it doesn't mean there's any material change. And by the way, they're going to start exploring, not implementing, exploring, which means testing for probably years and years and years. And then we have to understand what's going on in the regular general economy, right? We have the government shutdown, which is going to have lag effects, right? People are like, oh, well, once they stop the shutdown, everything's going to be great. No, there's lag effects. We also know that the layoff situation is not going to reverse. Chegg slashes 45% of their workforce, blaming new realities of AI. The company blamed new realities of artificial intelligence and diminishing traffic from search engines like Google because people aren't using Google anymore. And for Chegg services, supposedly it's like it helps you with assignments for school and stuff like that. But you could literally just do that with the AI, with large language models like ChatGPT or Grok or one of the other ones. You could just say like, hey, write me a thing for this. And so that's why they're losing a lot here, right? We also know Amazon. This is a letter that was just sent out to employees at the end of October 2025. It says, I want to let you know that this is by basically their HR team. I want to let you know that we're making organizational changes across Amazon that will impact some of our teammates. There are communications from leaders to those teams and individuals, but we also wanted to share the broader context about what's happening and why. And so they talk about, oh, we love our team and all that stuff. While this includes reducing some areas and hiring in others, it will mean an overall reduction in the corporate workforce by 14,000 roles. We're working hard to support everyone who's impacted, including offering most employees 90 days to look for a new role internally. So you're going to be fighting with 14,000 other employees to go after maybe, 1,000 jobs. And our recruiting teams will prioritize internal candidates to help as many of those find new roles within Amazon. For the teammates who are unable to find a new role or who choose not to look for a new one, we'll offer the team transition support, including severance pay, outplacement services, health insurance benefits, and more. So they're laying off 14,000 people, right? And keep in mind, these are corporate employees. But if you think about what Amazon has been telling us, 75% of their warehouses are not like people. It's 75% of the workforce is robots. And they just made the announcement like recently that they're going to buy something like another 1 million robots to put in their warehouses. So this is already underway. We're seeing a lot of this layoff situation. A lot of Target just said that they're going to be laying off thousands of employees. Some of the other tech companies are doing the same thing. And so people are not prepared for this because, number one, these are jobs, 14,000 jobs that are not coming back. Even if the government resolves the situation and we go into another boom, those jobs are not going to be replaced. And the reason is because either one, AI can do it, make it easier. Like just think about like call centers. Like back in the day, you had call centers. You would call customer service and you would speak to a human. Now they have AI deal with most of this, and they still have some call center employees, but the call center employees are significantly less than it used to be. And some organizations, they only have customer service through email and chatbots. And so you can't even reach a live human. And that's because, somebody answering emails can do things more efficiently and on their own time versus somebody sitting and waiting for a phone call. And so things like that you have to think about. And, I just read a stat that in Hollywood, in California, since 2020, the people who work for the film industry, TVs, movies, TV shows, stuff like that, the workforce has been reduced by 35% already, just in the last few years. And so if you're not understanding what this means for your job, for the future, right? Because all companies are going to be doing this. These are the biggest companies that we have, Amazon, right? And they're laying people off. Target, laying people off. Chegg, laying people off. All of these other companies are doing the same thing. And yeah, they're going to blame AI. They don't care. They're going to blame AI. They're going to say, well, we got more efficient. We were able to do this. They're going to blame AI. But the society, right? The workers, they're not prepared for this. They're not prepared for the downside that if they're the ones that are out of the job, now they're competing against 14,000 other people just at their own company for another job. And the same thing goes for the crypto markets, right? MicroStrategy bulls are not prepared for a drawdown in the Bitcoin price. The Ethereum digital asset treasury bulls, they are not prepared for a drawdown in the Ethereum prices. And if you're not prepared, you lose. And so you have to be prepared. You have to hedge your investments. You have to prepare if your job, and it's pretty much every job, like it's not like it was years ago where you had job security. Very few jobs have job security. I mean, even with the government shutdown, people are getting laid off, people are getting furloughed. They're threatening that these are going to be permanent layoffs. This is going to impact people who are not prepared for it. And this is going to impact the overall economy. You know, if people don't get their food stamps, regardless of what your viewpoint is on people receiving food stamps, right? These people rely on it. And so if they're not getting it, how are they going to get food? How is this going to impact the food distributors, the supermarkets? How is it going to affect their bottom line? And they have employees who are working there and expecting that there's going to be customers coming in and buying this stuff. And so we just have to understand how the overall economy is a little bit shaky right now. And there will be longer term effects of all of this, of, major spikes because runaway bots are, pushing the price up, doubling it in a matter of minutes and then bringing it right back down. And they scrubbed it from the charts because they knew people would keep chasing this top and never get there. Or it would just take a lot longer than they thought, right? And so we have to keep that in mind when we're understanding where we are in the Bitcoin cycle, where we are in the psychological market cycle. Because in my view, we are at complacency phase. A lot of people are not looking at the risks in the market. They're not looking at the risks in the job market. And they're not preparing for what comes after if the risks, a black swan, more trade war, a longer government shutdown. How is this going to affect and impact not just one industry, but all the industries, not just your job, but all the jobs? And so with that, let me know what you guys think down below in the comments. I'll see you on the next video. And as always, don't forget to give the video a thumbs up, hit the subscribe button, check out my other videos on the channel. And as always, crypto on.